Thinking of investing, working, or starting a business in the cannabis industry? We've got you covered right here on Plant Problems. Hosted by Tony Frischknecht, Plant Problems takes a different approach to cannabis than what you're seeing and hearing from the mainstream media. Come along with Tony and be in the know about how to invest, work, or start a cannabis business. Let's get the show started with your host, Tony Frischknecht.
Hello, everyone, and welcome to another episode of Plant Problems. Thank you so much for joining me today. It's a pleasure to be here with you. And I want to share with you guys some really cool stuff today. This is really exciting for me because I wished I had had the time when I was in the dispensary business to find some of this stuff out. I think this is extremely valuable for those of you who are just starting, as well as people that are in the deep part of the business now, or what I like to say, the trenches, right? Today I'm going to talk to you guys about a couple things. One, 280E. If you're not familiar with that, get familiar with it. And I'm also going to share with you what I've found to be a different method of accounting that's going to be able to help you work around 280E. Now, over the last couple of years, the media has been talking about banking. The industry needs banking. The industry needs banking. Got to get banking. We got to get banking. This has been talked about since legalization happened here in Colorado. So it's not a new discussion. And what I really find irritating is that there are very few people that are truly discussing 280E and how it affects your cannabis business, especially on the retail end. I want to start off here first by saying any of this information I give you guys, please take this to your accountant, talk to them, see how it can possibly help you. So all this information on this episode today, I want you to take a look at and be careful. But also remember that you guys are in cannabis because of the opportunity. So if you're scared, that's normal, okay? That's a normal thing. However, the scariness of this may also be why you like the industry. It's new, it's exciting, but you're going to have some ups and downs. So please take this information and understand that you have to take other risks, not only due to the fact that what we used to say back in the day is, we were distributing a federally illegal substance, which you guys still are today. But our big concern was getting arrested or sent to federal prison for trafficking. That's not really, from what I see nowadays, there may be a few people out there that are still concerned about that, but from what I see nowadays, that the regulations are starting to take place. They're starting to take a foothold in a lot of the newer places, and we're also starting to see the federal government. So remember, these are ideas that I believe can help you get ahead, because right now, the way the taxes are set up for cannabis doesn't allow you to grow as a business. So what can you do? Well, I want to start by saying that, I have firsthand knowledge. I've actually been through, I'm actually currently, I can't talk about the details too much, but I'm currently in an audit situation dealing with 280E. So I'm not telling you this because, this information that I'm going to share with you today, I'm not telling you this because I think, this has got to be a way around it. And, I've taken the risk. We've played the games with 280 and trying to move that around in our company, in several companies, to take it to our advantages the most we can with the guidance of virtually nobody. That's what we're dealing with out there in the cannabis world. The IRS isn't going to tell you how they're going to audit your business. Right over the last few years, they've been learning how to do that, taking companies like mine and saying, okay, well, we need this, and they're doing extreme, intense audits. So here's the story. Sold my business back in 2015, and then I sold another one back in 2017. Well, since 2015, I've been dealing with the same audit. So now, to date this, I'm 5 years into an audit. And I know some of you are like, oh my gosh, are you serious? Yes. And I'll tell you why. We are playing the long game with this. There's so much that's happening with regulations, and the IRS is learning, and they're coming up with new things. So for the last couple of years, I've been hoping we could find something. Well, I've recently come across some information, and some of you may be familiar with this, but a new accounting method. And what triggered all this was actually the Tax Cuts and Jobs Act. That was, it was when the new administration, they did the overhaul of the tax program. They said it was one of the largest in decades that has taken place, so on and so forth. Of course, there was a bunch of media around this and said, but we hadn't really heard much more than that. And a few months ago, March 30th, 2020, IRS was actually audited by the Department of Treasury. And they were being audited on their processes and how they worked through these marijuana business audits, right? And there was some interesting stuff that came up. And like I said, the Tax Cuts and Jobs Act, it kind of triggered this audit because it's trying to reduce tax issues throughout business in our country. So this report represents the results of our review to evaluate the Internal Revenue Service examination and education approach to certain cash-based industries, with an emphasis on legal marijuana operations. This audit includes in our fiscal year 2020 annual audit plan and addresses the major management challenges of improving tax reporting and payment compliance. It's been referred to as a memo. There's some really interesting stuff in here. So I am going to post this for you guys in this episode. So you should be able to either find it on my website underneath this episode here, and I'll make sure there's a link there, but it's so worth reviewing. It's about a 40-page document. I've been combing through it this last week, and I found a couple things. I found several things. And so what I'm going to do is I'm just going to go over 280E real quick. And you guys need to take this more in depth and really understand it. But so I'm going to read from the document here. So under the Controlled Substance Act, it is illegal to manufacture and distribute marijuana. Well, we all know this. Further, Internal Revenue Code 280E prohibits the deduction of expenses incurred in trafficking controlled substances. Okay, so hopefully you guys know that. 280E does not apply to cost of goods sold. Consequently, businesses that sell marijuana can reduce gross receipts by the cost of business sold, but cannot deduct other business expenses. That, in a nutshell, is crushing to most businesses. Speak about this example here. So let's just say you had a gross income of $500,000. Your cost of goods sold were $250,000. Business expenses that were talked about at the end of that paragraph there that cannot be deducted are $150,000. So your net income is $100,000, and then you have to add $150,000. Well, you paid that out, right? I thought I paid that to business expenses. Technically, you did. But since 280E is involved, you actually have to pay taxes on that $150,000 that you don't have anymore. So that's where that taxable income comes to $250,000. So you got your net income plus your $150,000 is $250,000. So it says graduated corporate tax. Now, depending on how you're set up as a business will depend on how you're taxed. Your actually tax liabilities. So you're looking at $80,750. It seems like very little. However, you don't have this money anymore. So you've lost out on $150,000 in revenue that you don't have anymore, and you're paying taxes on that. It's absolutely unbelievable. I don't want to go too far into that because it's really easy to get lost in the deeps parts of 280E. So let's get to what I think. We'll get to some of the center of this document here. So the impact on taxpayers of the findings of this audit. Marijuana is classified as a Schedule I controlled substance under the Controlled Substance Act. Business in this industry have limited banking access and are subject to Internal Revenue Code Section 280E, which prohibits the deduction of expenses, which we just talked about, incurred in trafficking Schedule I. So this all has to do with trafficking Schedule I. And this goes back to the RICO Act. You can do some deep digging on that, but this was something that was used back in the 80s to tie conspiracies to several people for taking down large criminal organizations like the mob and different stuff like that. So it became super popular. Well, decades later, we're having to pay for the effect of that in the cannabis industry because we deal with a controlled substance. So, but if you don't know about the RICO Act, you are semi in a gray area still working in cannabis, so it's worth a read. Why did they do the audit? This audit was initiated to evaluate the IRS examination and education approach to certain cash-based industries with an emphasis on legal cannabis operations, what I just went through in the opening there. So, statistical random samples of marijuana businesses in 3 states and determined that 59%, so 140 out of 237 of the tax filings for tax year 2016 had likely 280 adjustments. Okay, that makes sense. Which when projected over the population totaled 48.5 million in unassessed taxes for tax year 2016. So that's a huge amount. So they're finding that, this overtaxation is happening because of 280E. Well, just so I don't sound like a storybook here, so the highlight, what was recommended to the IRS? Recommended that the IRS develop a comprehensive compliance approach for the marijuana industry, including a method to identify businesses in the industry and track examination results. Develop and publicize guidance specific to marijuana industry, such as a guidance on application of what we're about to talk with you about is 471C, which is an incredible way of adjusting your accounting method. In conjunction with IRC 280E, leverage publicly available information at the state level and expand the use of existing Fed-state agreements to identify non-filers and unreported income in the marijuana industry, and increase education outreach towards unbanked taxpayers making cash deposits regarding the unbanked relief policies available. So, with all that said, the audit is requesting the IRS start giving some guidance. that they haven't given ever. So we'll say ever. 471C. Okay. This is big, right? 471C, IRS code 471C, has the ability to do. So the small business self-employed division has developed an internal document, participant guide, that provides revenue agents with guidelines on how to audit marijuana. This is not available to anyone. They have kept this internally. So right now we're being audited on whatever they've come up with these guidance lines for the IRS agents. None of us know what that is. It's unheard of in any other business. According to the IRS Internal Participant Guide, pursuant to 471-11, costs of goods sold for producers includes direct material cost, marijuana seed or sale, direct labor cost, planting, cultivating, harvesting, sorting, and indirect costs. Indirect costs may include repair expenses, maintenance, utilities, rent, indirect labor, and production supervisory wages, indirect materials, tools, and cost of quality control. The IRS Internal Participant Guide noted the cost of goods sold for retailers includes the cost of marijuana purchased, less trade or other discounts, plus transportation and other necessary charges in acquiring possession of marijuana. According to the marijuana industry training conduct by the IRS, large businesses and internal division inventory issues, practice area, costs of goods sold does not include, and then it's got a list of everything else. So let's go to 471, okay? We've got, here's an example. Now, first I want to start by saying this applies to only businesses making under 25 million. And also, this hasn't been tested in any courts right now, but I know some very, very large accounting companies that are using this formation. How do I know? Because I'm involved in it. So what I want to say here is that this is something that you, the new business owner, can start with. Or if you're willing to change your accounting methods, you can start using this process. So case B, well, here we go. Case A, tax year 2017. I'm just going to give you an example. So you've got gross sales of $1 million, cost of goods sold $500,000. So minus that. So your gross income is $500,000. Then you've got advertising, you got repairs, maintenance, you got salaries and wages, total expenses, total business expenses. So here's where we go into your 280 adjustments, $250,000. Net business expenses, 0, right? So right here we've got taxable income of $500,000. Okay. Case B, changing in the accounting method. Here's when you use 471C. You've got $1 million in gross sales. Cost of goods, $750,000. Now on that last case A, we had $500,000. Okay, so now we've reduced our gross income, okay, by $250,000. We've used this new accounting method, took it out of 280 and actually put it in our cost of goods. Here's the next part. In our advertising, we have in this accounting method 0. In our repairs and maintenance, we have 0. In our salaries and wages, we have 0. In our total business expenses, we have 0. IRS 280E adjustment 0. And net business expenses 0. Taxable income, $250,000. We just cut our taxable income in half. Guys, this is one of the greatest tools I've seen for the tax industry right now. And I know I'm sitting here thinking to myself, well, what about people, like how can we trust this? Okay, that's what you have to talk to your tax advisor. What are the pros and cons of working this method? Yes, it hasn't been tested, okay? But you are in this industry because it's thriving and it's growing, and you're taking chances. Guys, this is how you can grow your business. People are going to probably throw their arms up at me like, Tony, you don't know what the hell you're talking about. I do. I've taken risks to be here in front of you today. That's this place and time, right? These are the things that the real entrepreneur, which I know there's tons of you guys out there right now, you're looking for these key things. This is survival. This is growing your business. It's a huge, huge advantage to you to look at this. And if you have a tax advisor that knows nothing about this, you need to run, especially if they don't know anything about 280E. So, guys, I am going to go into this deeper. I'm probably going to bring, I'm going to bring some different accounts on. We're going to discuss this because there's cons to this. Absolutely. I've got tons more information here, but I know you guys are busy. So I want to provide you guys some choices. Okay. There's several different choices you can take out there, but I'm going to provide you with some stuff that I don't see anybody's giving you out there. Again, I wish somebody would have been like, God, this is something I need to talk to my tax guy, because at the end of the day, what you take home that's how you can judge your success. If your success is judging on how much cash you make, everybody's got their own judgment of success. Please look into this. It's huge, okay? So come check me out, plantproblem.com. Of course, it's free to listen, guys. Please go in there. I'm sorry my phone keeps going off right now. But I've got a lot of people I'm talking with about this 471C. It's huge, huge. So again, take some time, talk to some people, talk to people that advise you. Talk to them about this memorandum, give it to them, say, read this. There's some people backing this up that they're very prominent attorneys that are testing this, and it's happening right now. So if you want to save some money on taxes and actually grow your business and make some money, look into this system. And guys, always a pleasure being with you here. I'm trying my best to find anything I can to help the small business owner and even the large business if they haven't heard of this. Some of these things, when you get in these large accounting companies, it's steady go. We've been doing this for years. And you can't take the cannabis business or the cannabis industry. It's a totally different animal when it comes to moving and adjusting through the weeks and months. And we've had some hard times lately, but what I'm really excited about is there's a ton of cannabis companies that are really taking advantage of this right now because they've been deemed essential in a lot of states. Not every state, but a lot of states. So there's some super big growth happening. So don't lose that revenue that you've just worked your tail off for the last couple months. You guys have been crushing it lately. So please look into this. Please also stay connected with me so you can see when I'm going to talk to some accounting specialists about this. And we're gonna tear this apart and decide, okay, what are pros, what are our cons, and really figure out how this looks. And then you can make a decision from there. Whether you want to take this further and potentially use this in your company. So thank you so much for joining me today. I want to be able to provide you guys with some great information. And I'm trying to be as creative as possible here so you guys are able to, either spin this into a new idea or spin this off into another, another opportunity for yourself. So guys, I love you guys out there. I respect you guys. I know you guys are really fighting the fight. So keep going and come back and join me next week when I have a new episode. And I will look forward to being here. Okay. Bye for now.
You've just listened to another insightful episode of Plant Problems. If you like what you heard so far, don't forget to tell your friends and colleagues. For additional resources or to leave a review, head over to plantproblem.com. Join us again next week on Plant Problems with Tony Frischknecht. We look forward to having conversations with you as we go along this journey.